Hello, in this video I'll be sharing with you another exciting and profitable strategy that you can adopt in your trading. Now, the essence of sharing this series of strategy with you is for you to look for a strategy that suits you. Now, you must not trade everything. And as a trader, an individual, our level of comprehension, understanding differs. So if you are finding it difficult to understand a particular strategy, it is very important that you find another strategy that can be easily understandable to you, and then you build your trading system around it. And that does not mean any strategy is superior to the other. The essence and the goal of trading is for us to make money, to make profit. So whatever strategy pays our bills is good enough to go. And every strategy shared with you here are profitable if only you practice and you follow every instruction. So today we are looking at divergence. And divergence is a disagreement between our price action on the main chart and our indicator window. For example, maybe on our main chart, price is doing a higher high. On our indicator window, you will notice that the indicator window, instead of making a higher high, is making a lower high. So this lower high that the indicator window is making is what we refer to as divergence, which means a disagreement between the price action and the indicator window. And this sends a signal to us that a reversal is about to happen. So this divergence can be used across all time frames. When it comes to divergence, you do not need to do a top-down analysis. You don't need to say, okay, let me do analysis top-down, find entry on a lower time frame. No. You don't necessarily need to go and determine the trend, because what you want to catch up in this scenario is for you to catch up with a reversal. So this is the scenario for an uptrend, and in a downtrend, price will be making a series of lower low, while the indicator window will be making a higher low. So you'll be having a higher low, while the price is making a lower low. So this is a situation of a bearish regular divergence, while the first one I share is a bullish regular divergence. So this is how we can go about it and how we can find our entry. So the simple way to find entry in this scenario is when you are having your higher high and the indicator is giving you a lower high. All you need to do is for you to connect, mark your structural point with your trend line. So you want to see price break the trend line, give you a retest, and then you go to the downside. So this is how simple you can take advantage of this, and it is very, very profitable. So the indicator I'll be using is our Bollinger Band and our MACD indicator. So our MACD is our moving average convergence divergence. And here's the setting for our Bollinger Band. The period is 130, deviation is 2.0, apply to shift. Shift is 0, apply to close. We can take a screenshot of it. Then we have our RSI, period is 6. Take a screenshot of this and then you do the setting. And here is our MACD setting. You take a screenshot of it just as you are seeing it and you set it up on your chart. So looking at this present scenario, this is H1 time frame. Here we are having an equal high. So when we are having an equal high, it is expected that our indicator window as well give us an equal high. But if you look at our indicator window, it's making a lower high. instead of an equal high. So because of this lower high, we know that this is a divergence. So all we need to do is for us to connect our trend line this way at our structural point and price break through it, and we'll make our entry. So this is pretty much simple. Here we have another one. Here we have our higher high and we have our higher high. Coming to our indicator window, the indicator window is making a lower high and a lower high. You can see how tiny it is. All you need to do is train your eye to recognize these zones, to have this lower high and this lower high, which is opposite of what we are having. And having spot that will mark our trend line. And look at what happened. Price break it beautifully, went to the upside and retest it. And that gives us a beautiful entry for our trade. Now the essence of this Bollinger Band is for you to note that 80 to 90% of the divergence happen around the upper Bollinger Band, lower Bollinger Band, and the middle Bollinger Band. So you'll be focusing on those ones that happens around that particular zone of the Bollinger Band. Here, look at the situation of the middle Bollinger Band. We have this and we have this. So this is an equal low. We are considering the wick of the candle as well. But look at our indicator window. We have this and this. It's giving us a higher low while we are having an equal low. So you can see now that you can connect your trend line this way. And what happened? Price break out of the trend line. We have this retest and this is a buy to the upside. So this is pretty much simple and you can capitalize on it to build your trading system around it. Look at this scenario. This particular scenario is very logical. Here we have our lower low, we have our lower low, we have our lower low. Now look at here, we have a lower low, and here we have a lower low. But the next thing we are having a low here, we begin to have higher low, higher low. So what is the next thing? You connect your trend line to your structural point here and here. And look at what happened. Price break through it, retest it, and you can see how beautiful the move is to the upside. So you can trace this down to our lower time frame. This is applicable on all time frame, including 1 minute. Now look at our 15 minutes. Look at our H1. This move here on our H1, if you were to be on 15 minutes, you would have been in this trade far more earlier. So when it comes to divergence on any time frame, here we have lower low, lower low. And look at our indicator window. We are having a higher low and a higher low. So if we connect our trend line this way, see the break of price break to it, you make your entry, your stop loss is here. And you can see how beautiful you can take advantage of this. So like I said, you can build a complete trading system around this. So the goal of this, you can see this and this. Look at our indicator window, see this and this. So we are having higher high, and here we are having a lower high and a lower high. So what do? I connect my trend line. So with my trend line connection this way, you can see the price break through it, price retest, and you can see how the sell went. Okay, here we have another one. You can see this, 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 and this. So this thing is pretty much simple and like I said, it is one of the best strategy that you can leverage and count on. This is crash 500 here and here, and in this case we are having an equal low. So this is a divergence. You make your entry and you see the move to the upside. I want you to backtest this and see how profitable this particular strategy is. Very, very profitable. It can be used to trade anything that has a chart. Anything that have a chart. Look at this. Lower low. Look at it here. Lower low. Look at it. We're having a higher low. So when we connect this and this, you connect your trend line. Okay, connect our trend line this way. You can see that price break to it, retest it, and the move is massive. So this is one of the strategy you can build your trading system around it. I believe you have gained value from this video. Please do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified whenever we publish on the next video. And if you have any question, do well to ask your questions in the comment section.